Exercise 14. World Imports uses the perpetual system in accounting for merchandise inventory and had the following transactions during the month of October. We're asked to prepare entries to record these transactions, assuming that World Imports records invoices at the gross amounts and then at net amounts. Let's start first recording the inventory at gross amounts. When a company records inventory at the gross amounts, they ignore any possible savings as a result of the discounts until the actual payment is made. So on October 2nd, when they purchase merchandise at a $4,400 price, invoice dated October 2nd, terms 210 net 30, we don't assume that we'll take that 2% discount unless we pay within the discount period. The inventory is recorded at the gross amount. Debit merchandise inventory $4,400 and credit accounts payable. On October 10th, received a $350 credit memorandum at the full invoice price for the return of merchandise that it purchased on October 2nd. This transaction reduces accounts payable. We debit accounts payable $350 and reduces the value of the inventory, credit merchandise inventory, for $350. Both the purchase and the return are recorded at the gross invoice price. October 17th, purchase merchandise at a $4,750 price. Invoice dated October 16th. Terms 210 net 30. Debit merchandise inventory for the full amount $4,750 and credit accounts payable. October 26th, paid for the merchandise purchased on October 17th less the discount. Returning to the October 17th transaction, it's a $4,750 invoice with a 2% discount available if we pay within 10 days, which we do. We debit accounts payable for the amount originally recorded, which was the entire $4,750, the gross amount. Credit cash for 98% of $4,750, $4,655. And credit merchandise inventory for 2% of $4,750, $95. October 31st, paid for the merchandise purchased on October 2nd. Payment was delayed because the invoice was mistakenly filed for payment today. This error caused the discount to be lost. On October 2nd, we purchased $4,400 of inventory and then returned $350 on October 10th. The payable then is $4,050. And since we lost the discount, cash is $4,050. Now let's go through these same transactions, assuming that the company policy is to record inventory at the net amounts. So on October 2nd, purchase merchandise at a $4,400 price. Invoice dated October 2nd, terms 210 net 30. The company's policy is to take advantage of all purchases discounts. The journal entry is a debit to merchandise inventory for the net amount 98% of $4,400, $4,312, and credit accounts payable for the same amount. On October 10th, we receive a $350 credit memorandum, but that's the full invoice price. Since our payable is recorded at the net amount, any adjustments to the payable are also at the net amount. Therefore, we debit accounts payable for 98% of $350, $343, and credit merchandise inventory for $343. On October 13th, we have a journal entry that recognizes the fact that the discount period has elapsed on the October 2nd purchase. We missed that 10-day window. Therefore, we know we will not be able to take advantage of the 2% discount. The balance due as of October 13th is $4,050, $4,400 minus $350. The balance in accounts payable, however, is only $3,969, $4,312 minus $343. The account payable balance is understated by $81. The journal entry to bring the payable up to its new balance is a debit to purchases discounts lost for $81 and credit accounts payable. Using the net method highlights any deviation from the company policy, which is to take all discounts. Someone would now have to explain why that $81 discount was lost. October 17th, purchase merchandise at a $4,750 price, terms 210 net 30. We again record this purchase at the net amount. Debit merchandise inventory for 98% of $4,750, $4,655, and credit accounts payable. October 26th, we make the payment on the October 17th purchase. We've already taken the discount, so we simply debit accounts payable and credit cash for the amount recorded of $4,655. On October 31st, paid for the merchandise purchased on October 2nd. The balance in accounts payable is $4,050. We adjusted to this balance on October 13th. Debit accounts payable and credit cash. The net method, while a little bit more complicated to administer, is an example of management by exception. The balance in purchases discounts lost is an indication of how well the company was following the policies.